Interested in the trajectory of the American real estate scene over the coming half-decade? Navigating the real estate market's complexities and its dynamic nature is challenging, as it's fraught with unpredictability. Yet, drawing from prevailing trends and authoritative insights, we can piece together a forecast for the imminent future. This exploration will unpack expected shifts in the property market over the next half-decade, and their implications for both purchasers and vendors. Anticipation holds that the property market's vigor will persist through the next 5 years. Notwithstanding, pivotal elements like escalating interest rates and a burgeoning home inventory could sway the market's balance. The ascent of home valuations is set to persist, though at a tapered velocity. The steep incline in housing costs witnessed in preceding years is predicted to decelerate, with prices continuing on an upward trajectory, though at a reduced rate. The inventory of available properties is poised to expand. The recent price surges have been significantly fueled by the scarcity of homes on the market. But with construction ramping up and more houses entering the market, we may see an easing in this shortage. Mortgage rates are on an upward trend. In efforts to temper inflation, the Federal Reserve has elevated interest rates, rendering borrowing more costly and dampening home buying enthusiasm. However, forecasts indicate a potential downturn in these rates in the years ahead, which could revitalize market demand. The competition within the housing market is slated to remain stiff. Despite higher interest rates and increased housing stock, several factors, such as robust employment growth, population increases, and limited land availability, will ensure the market stays spirited. While these patterns provide a glimpse into the market's direction, other considerations must be acknowledged for a comprehensive understanding. We will delve deeper into these aspects and conjecture their impact on the real estate market. The market's intricacies are integral to the broader U.S. economic fabric, and foretelling its direction is a complex task, subject to numerous influencing externalities. Some market analysts hold an optimistic perspective, yet even those who foresaw price escalations into 2023 are recalibrating their expectations. The U.S. real estate market is set to moderate in 2023 following a 40% swell amidst the pandemic, as per the National Association of Realtors, NAR. While escalating interest rates are poised to inflate mortgage expenses for new entrants, a plummet akin to the 2008 downturn is improbable, thanks to more stringent lending protocols. The pandemic era saw the market surge, propelled by historically low borrowing rates that spurred first-time acquisitions and a construction lag. Opinions are split among experts regarding price stability or a plunge in the next 5 years, but there's a consensus on an impending market deceleration. Property availability and interest rates, which dictate mortgage rates, are the main drivers of the U.S. housing market. In 2021, the median existing home price rose by 16.9% to $346,900, with sales peaking since 2006 at $6.12 million. The catalysts were rock-bottom interest rates, heightened single-family home valuations and rents, low foreclosure rates, and a 15-year sales zenith. Nonetheless, the pandemic-induced surge waned in 2022. Come December, existing home sales hit a seasonally adjusted annual rate of 4.02 million. This reflected a 34.0% dip from the prior year, marking a year-long trend of declining home sales, with the annual rate hitting a nadir unseen since 2014. Expectations lean towards a cooling market in 2023, with forecasts split on whether prices will level out or plummet. The U.S. Federal Reserve's interest rate hike signals could precipitate this slowdown. However, a repetition of the 2008 crash is unlikely given the fortified lending criteria. Over the coming quintet of years, the forecast for the U.S. property market indicates a tempering pace, with valuations either stabilizing or gently dipping. A Zillow analysis suggests a modest uptick in home worth by 5.5% within the next annum, a marked deceleration from the vigorous 16.9% surge in 2021. Projections extend to a 3.5% increase in 2023, tapering slightly to 3.4% in 2024, 3.3% in 2025, and settling at 3.2% by 2026. Despite these increments, the volume of properties on the market is expected to remain constrained, continuing to exert an upward force on prices. Venturing deeper into the half-decade horizon, expert consensus alludes to a mellowing in price escalation within the housing market, with some forecasting a plateau and others a slight retraction. This anticipated shift stems from an amalgam of rising borrowing costs, an infusion of new housing stock, waning demand, and the financial stretch for prospective homeowners. Borrowing costs for home acquisition are poised to climb, departing from the prolonged era of historically low mortgage rates. Economists anticipate this rise to erode the purchasing capacity of would-be homeowners, precipitating a fall in demand that may apply a downward drag on prices. A swell in available housing also contributes to the expected deceleration in the market. The recent price swell was fueled by scant supply, yet this trend is set to invert as construction initiatives burgeon. Moreover, homeowners who deferred sales during the pandemic may soon opt to list their properties, enhancing the selection of available homes. Affordability remains a pivotal concern, with soaring home prices stretching budgets, particularly for novices in home buying. This affordability hurdle, coupled with escalating interest rates, could culminate in softer demand and, subsequently, price reductions. Nevertheless, the projections steer clear of envisaging a crash akin to 2008's downturn. Sturdier lending practices are anticipated to stave off widespread loan defaults and repossessions. Additionally, the current economic backdrop, characterized by robust job markets and a resilient financial sector, differs substantially from the previous crisis. Even as a more sedate price growth looms over the next 5 years, the consensus steers away from predictions of a severe downturn. The blend of heightened interest rates, increased housing stock, and affordability issues are poised to moderate the pace, but the economy's vigor and stringent lending norms are expected to avert a drastic fall. If you're keen on staying abreast of these evolving dynamics within the U.S. housing market, consider subscribing to this channel. Your subscription ensures you remain informed with the latest insights and predictions, equipping you to navigate the property landscape with confidence. So hit that subscribe button, and let's keep a pulse on the future together. Housing market predictions. Real estate forecast next 5 years. Speculation is rife about what lies ahead for the property market in 2023, but projections extending to 2024, 2025, and beyond are equally significant. Forecasting the real estate trajectory for the next half-decade is no small feat, yet here's what the majority of experts anticipate may unfold. The COVID-19 pandemic has indelibly marked the property and land use industries, and its ripple effects are expected to influence regional housing markets' demand and supply chains for years to come. Advancements in technology, demographic shifts, the health of local employment sectors, and the burgeoning trend of telecommuting are all forecasted to play pivotal roles in sculpting the future real estate landscape. Drawing from the U.S. News Housing Market Index, a bellwether data-centric analysis of nationwide housing trends, the following insights are gleaned for our discussion. It's within the realm of possibility for median property values to dip by as much as 5% come 2024, should mortgage rates plummet more swiftly than anticipated, potentially leaving house prices relatively stable until the close of that year. Conversely, should disposable income surge ahead of inflationary pressures, this could enhance buyers' financial leeway coupled with reduced borrowing costs, thereby invigorating affordability, sales activity, and subsequently, property valuations. If this trend of disposable income growth persists from 2025 to 2027, we might witness housing prices climbing roughly 1% to 2% above the prevailing inflation rate. Nonetheless, patience will be paramount to see housing values reach the zenith observed in mid-2022. Housing Market Predictions 2024. The year 2024 is anticipated to be a period of enhanced equilibrium in the real estate sector, following a stretch marked by volatility. Should mortgage interest rates decrease more rapidly than projected, we expect housing prices to largely stabilize throughout the year. This stabilization bodes well for prospective buyers who have been biding their time, seeking an opportune moment to invest in the market. The U.S. News Housing Market Index suggests that the shortfall in national housing inventory is set to persist into the late 2020s, tipping the scales in favor of sellers across numerous locales. Echoing this sentiment, the National Association of Home Builders foresees the housing deficiency enduring till the decade's end. With the backlog in housing demand estimated between 1.5 and 3.8 million units, it will be a considerable duration before builders can secure the requisite land, labor, and materials to bolster the housing supply adequately. Furthermore, the escalating expenses and repercussions of climate change are slated to play a significant role in real estate come 2024. Both homebuyers and developers will need to take into account the financial implications of constructing dwellings that can withstand the effects of climate change and severe weather conditions. The aggregate cost of owning a home will emerge as a pivotal consideration, encompassing not just the acquisition price and mortgage rates, but also encompassing property levies, upkeep expenditures, insurance fees, and other related financial obligations. Housing Market Predictions 2025. As we look to 2025, the real estate market is projected to gain momentum, with property values anticipated to climb by 1% to 2% over the existing inflation rate. This upswing is attributed to a synergy of factors, including escalating real wages, declining mortgage rates, and enhanced housing affordability. Yet, it's expected to be a gradual ascent to the peak housing values witnessed in mid-2022. An emerging trend will see more individuals teaming up with kin or friends to enter the homeownership market. The rise in multi-generational living arrangements, adult offspring returning to the parental nest, and households forged from friendships will increasingly consolidate various income streams to secure property ownership, steering clear of the unpredictability associated with rental costs. Furthermore, the construction methodologies for residential properties are poised for transformation in 2025. Progressive technologies such as 3D printing, prefabricated building elements, and resource-efficient software are set to gain traction in the construction sector. These innovative techniques are predicted to not only enhance the caliber of building projects but also expedite the construction process. Housing Market Predictions 2026. By the time we reach 2026, the trajectory of the housing market is poised to maintain its gradual ascent, with property prices forecasted to increase at a steady rate. The backlog in housing needs is projected to be met between 2025 and 2030, as suggested by the National Association of Home Builders. Nonetheless, a demographic shift expected by 2030 may temper the demand for new homes, potentially leading to a deceleration in construction endeavors. The practice of banding together with friends and relatives to invest in homes is predicted to persist in 2026, driven by escalating real estate costs and the pursuit of additional living space and privacy, prompting people to combine their financial resources. This shift is anticipated to further solidify the trend towards multi-generational homes and shared living setups. In 2026, the comprehensive cost of owning a home is likely to be a critical consideration, as potential buyers and constructors weigh the financial implications of climate change among other external variables. The increasing prices of insurance and construction materials, coupled with the necessity to accommodate a shifting climate, will underscore the importance for property owners to assess the full spectrum of homeownership expenses before making investment decisions. Housing Market Predictions 2027. Forecasting the real estate landscape of 2027 presents its challenges, with its fate hinging on a myriad of factors such as economic health, fluctuating interest rates, demographic shifts, and policy changes. Yet, current patterns allow us to hazard some educated forecasts. One dynamic potentially reshaping the 2027 housing market is the ongoing trend of urban migration. As populations gravitate from rural to metropolitan areas, the clamor for urban housing is likely to spike, prompting a surge in the construction of multifamily dwellings and townhomes to cater to the burgeoning city dwellers. Furthermore, the relentless advancement of technology stands to redefine the market. The rise in digital mobility enables a workforce that's untethered from traditional office spaces, potentially spurring a shift toward suburban and countryside living, thus inflating the demand for single-family homes outside urban cores. Beyond these societal shifts, economic indicators like interest rates, inflation, and employment growth remain pivotal. Interest rates, in particular, have a profound influence on mortgage affordability. Persistently low rates may incentivize home purchases, propelling demand and home values upward. Conversely, a rapid climb in rates could strain affordability, dampening demand and stabilizing or decreasing prices. Policy decisions will also play a role in sculpting the 2027 market. Legislative changes in housing regulation, be it through zoning, construction codes, or taxation, could either constrict or expand housing availability, impacting pricing in turn. Looking ahead, the confluence of demographic evolution, technological progress, and climate considerations is set to redefine demand and supply in housing. The National Association of Home Builders forecasts the housing shortage could extend to the decade's end, with total ownership costs becoming increasingly decisive for purchasers. Despite the unpredictability introduced by recent global events, the real estate market's resilience suggests a favorable climate for both buyers and sellers. Participants must monitor market trends and developments to navigate these waters wisely. It's important to underline that these projections are speculative, grounded in current trends and historical context, yet vulnerable to unforeseen factors that could alter the market's course. Therefore, this information is provided for general informational purposes and should not serve as the sole basis for any financial decisions. Any actions taken upon this information are at the individual's discretion and risk. Will it become a buyer's real estate market? The U.S. real estate market has experienced a surge in home valuations over the recent couple of years, propelled by a combination of limited housing stock, attractively low borrowing costs, and robust demand. Yet, the latest Zillow Home Price Expectation Survey indicates a forthcoming change in these dynamics. This survey, conducted between August 16 and 27, 2022, collated insights from 107 real estate experts and economists. We will delve into their forecasts regarding the onset of a buyer's market and the anticipated state of the real estate market in the foreseeable future. 2024. Further decrease in home prices. A majority of the panel, representing 56%, anticipates the emergence of a buyer's market in 2023, while an additional 24% project this shift will materialize in 2024. This suggests a strengthening buyer's market trend in the upcoming years. Budget-friendly markets in the Midwest, such as Columbus, Indianapolis, and Minneapolis, are predicted to experience the smallest decrease in property prices over the ensuing year. Meanwhile, rapidly expanding southern cities, including Atlanta, Nashville, and Charlotte, are expected to maintain their robust market dynamics. On the other hand, regions that underwent significant expansion during the pandemic, notably Boise, Austin, and Raleigh, are forecasted to experience a more pronounced cooling period. 2025. Further consolidation of the buyer's market. According to the survey results, 13% of experts predict that 2025 will see a continuation of the trend toward a more favorable market for home buyers, a trend that has been gaining momentum since 2023. The panel forecasts that for the next year, suburban and fringe of metro areas will remain in demand, while vacation destinations and central urban zones are more likely to encounter dips in housing prices. The overarching conclusion from the report is that a considerable transformation is on the horizon for the U.S. housing market. This includes a general decrease in home values and a pivot towards conditions more advantageous for buyers. Such a shift is attributed to a confluence of elements, such as climbing mortgage rates, persistent scarcity in housing inventory, and elevated price points that have deterred many would-be homeowners. While this market realignment is poised to favor homebuyers, the burden of increasing rents may continue to erode their savings potential, complicating the leap from leasing to property ownership. As the housing landscape shifts, keeping a close watch on these developments will be crucial for grasping their full impact on the wider economic scene. As we close this insightful journey through the shifting tides of the American housing market, we've unpacked predictions and emerging trends that are shaping the future of real estate. From the heart of bustling cities to the tranquility of suburban landscapes, the market is entering a dynamic phase that promises opportunities and challenges alike for buyers and sellers. For those of you looking to navigate this evolving market, understanding where the potential for investment lies is key. If you're intrigued by the prospect of uncovering real estate opportunities and want to delve into strategies for finding valuable deals, there's more to explore. On the screen, you'll see a video that serves as your gateway to discovering where to find real estate deals. This natural next step will equip you with the knowledge to identify and seize opportunities in a market ripe with potential. So, feel free to click and continue your real estate adventure with us.